Hey folks, welcome back to my channel and welcome to another lesson designed to help you reach your financial goals. If you're stopping by the channel for the first time, I appreciate you being here and I hope you'll stick around long enough to evaluate the content. And if you like what you hear, please take a moment to subscribe and don't forget to hit that thumbs up button for me. I really appreciate it. Today I want to talk to you about one method of investing that seems to be gaining in popularity of late. Whenever I see trends that show more average working class individuals are getting involved in the stock market, I get excited about that. To me, it means more people are deciding to take a more active role in shaping their financial future. However, anytime we jump into something new, there's always a learning curve, right? Whether you're taking up a new hobby or learning a new job skill, there's a period of time when you're not very good at what you're doing. Well, when you're dealing with your finances, these learning curves can be very costly. The investing trend that I want to talk about today is investing in penny stocks. If you're active on almost any social media platform, chances are you've probably either seen or heard someone either bragging about the huge profits that they've made in the stock market, or they're trying to convince you that they have a magic formula that you can use to make tons of money in the stock market. A lot of this talk is around investing in penny stocks, whether they say it directly or not, and a lot of them don't. So today I'm going to give you 8 things that you need to know before investing in penny stocks. So first, let's start with what are penny stocks. Now you may be thinking that penny stocks are stocks that trade for pennies, meaning less than $1. And that's true for a lot of penny stocks. But by definition, according to the Securities and Exchange Commission, penny stocks are stocks that trade for less than $5 per share. Now some investors consider penny stocks to be any stock below $3 per share that trade outside the major market exchanges such as the New York Stock Exchange. Now some people also refer to these as over-the-counter stocks or pink sheet stocks. Penny stocks can be small companies just starting out or who just haven't been successful enough yet to generate the kind of interest that would drive their stock price above penny stock status. Or it could be a larger, more established company that hasn't kept up with the times and have fallen out of favor. So the first thing you need to know is that there are a whole lot of reasons why a stock is considered a penny stock. The second thing you need to know about penny stocks is that the success rate at trading penny stocks is very low. Roughly 90% of people trading penny stocks are losing money. Now that's not what you hear about and it's not what you see on social media, but those are the facts. Now with that being said, somewhere around 10% of penny stock traders are making money, and some of them are making a lot of money. Now full disclosure here, I trade some penny stocks myself, and overall I've done very well. I've also had some ugly losses. If you're going to trade penny stocks, you have to know going in that the odds are stacked against you. It's like going to the casino. You know when you walk in that door that chances are you're going to lose money. But sometimes you win. And just like a smart gambler chooses which games to play based on the odds against him or her winning, a smart penny stock investor chooses his or her stocks based on the chances of them being successful. Sure, the slot machines pay big jackpots to some people, but think about how much money is dumped into each machine before it pays off. There's a reason why there are more slot machines than anything else in every casino, and it's not because they're giving away money. There are thousands of stocks that will fall into the penny stock category no matter which definition you use. So just know that the chances of you randomly picking a winner are very low. Now the third thing you need to know about penny stocks is that in most cases you can't find out what you need to know about a particular penny stock. Let me repeat that in case you didn't get it. The thing you need to know about penny stocks is that in most cases you can't find out what you need to know. Because they're not regulated by the SEC, most penny stocks are not required to file certain documents and reports that will be helpful in determining their chances of success. At least before you go to the casino, you can look up the odds for each game of chance. Compared to most well-established companies on the New York Stock Exchange, there's almost nothing available information-wise on a lot of penny stocks. Look for stocks that are traded on the over-the-counter bulletin board and carry the OB suffix to their ticker symbol. These companies do file financial statements with the SEC. So, knowing that you're not going to find a lot of information about a particular stock, the fourth thing you need to know about penny stocks is that you have to be more diligent in your research. You will have to look harder and search more places, but you can find some useful information about some penny stocks. One of the things I try to find out is who is investing in these companies and how much are they investing. I usually look for how many institutional investors a stock has, and is that number on the rise or declining. Institutional investors would be fund managers, insurance companies, 401k and pension fund managers, just to name a few. If fund managers are starting to buy a penny stock, it could be good for public perception and could be a good sign for a penny stock's future performance. These institutional investors usually have a lot more resources at their disposal and can do more research than the average investor. Next on my list of things you need to know about penny stocks is that arena is loaded with scammers. Some of the stocks themselves are fraudulent, and some of the warning signs investors should look for are things like SEC trading suspensions, large assets but small revenues, financial statements that include unusual or odd items in the footnotes, any odd auditing issues, and large insider ownership. You must also be aware of the old pump and dump scam. A pump and dump is a scam designed to manipulate the price of a stock through fake recommendations or false or misleading information. The perpetrators of a pump and dump already have an established position in the company's stock. Their goal is to drive up the price of the stock with this false or misleading information, and as soon as the price gets to their predetermined profit level, they will dump all of their shares, which will result in a crash of the stock price. Now, based on what I've said so far, you probably think that I'm totally against penny stocks, but actually I'm not totally against investing in penny stocks. As I mentioned earlier, I've done very well with a few penny stocks. So the next thing I want you to know is that while penny stocks do carry very high risk, and I do not recommend them to my clients, they also have the potential for some very high returns. I have personally seen 700 and 800% return on my investments on more than one occasion. I have also fell victim to a pump and dump and lost 100% of my investment. Luckily, that was early in my learning curve and I didn't have a large stake in that company. It still hurts, and that's why penny stocks is not for the faint of heart. Again, using the casino comparison, never bet more than you can afford to lose. Two last things that I want you to know about penny stock investing. One, if you're going to invest in penny stocks, look for small companies that have the potential to have a big impact in their industry. Do they have a new or innovative product that will either change how we do things or meet a long-standing need for a large segment of the population? How realistic are the chances of this company being able to bring this product to market? Biotech, for instance, is an industry that has the potential to do these things, but it is also an industry that is loaded with scammers. As baby boomers such as myself continue to age, They create a large segment of the population that are hoping for cures and better treatments for a number of ailments. If you're going to bet on biotech and pharmaceuticals, you need to understand what it takes to get FDA approval and whether a particular company has the resources to get through all of the stages of approval. And the last thing I want to make sure you know about penny stock investing is you must have a sales strategy. My number one rule when it comes to investing is don't get greedy. Once you've established your entry point, you need to decide on an exit point. One reason so many people lose money on penny stocks is that they're waiting for that slot machine jackpot. Many of them could have walked away with a nice profit, but they wanted more, and before they knew it, their profit and most of their principal was gone. Decide on a sell point for both a profit and a loss and stick to it. The other reason you need to do this is a lot of penny stocks have low liquidity, meaning there may not always be enough buyers when you want to sell, so you could get stuck. Having a sales strategy gives you a better chance of selling your stock before everyone else is trying to. So the bottom line is that penny stocks are very risky, and there are more losers than there are winners. But if you have the intestinal fortitude and practice some good behaviors, you can improve your chances of winning. No matter what your financial goals are, your behaviors would determine your success. Good behaviors produce good results, even if practicing good behaviors mean you don't do something. Like I always say, change your behaviors and you can change your life. So until next time, behave well.